Hi everyone, in this video I will cover my preferred Elliott Wave scenario on the weekly time frame. I will also talk a lot about the targets for this bull market, not only based on the analysis of the current bull market, but also comparing the current bull market with the previous two. I will cover everything in great detail, so likely this video is going to be a lot longer than the usual content on my channel, but hopefully you enjoy watching it, learn a thing or two, and find it helpful and valuable. I also shortly like to take a moment to thank all of you, as we have now reached over 20k subscribers, which is absolutely amazing, so thank you. Let's then start with the analysis of my primary account on the weekly time frame. We start off the 15k low with a triple 1-2, followed by wave 3, and then we're looking for a triple wave 4 and wave 5, which basically means in a nutshell that we are working on the final high time frame weekly range and then look for a final move towards the upside. Now on my chart, you can see three different Elliott Wave degrees. The highest degree count is 1, 2, 3, 4, 5. Inside this wave 3, we count a lower degree, 1, 2, 3, 4, 5. And inside this wave 3, between brackets, we have the lowest degree count, 1, 2, 3, 4, 5. Now if we start with the lowest degree count, then you can see that wave 3 moved to the 4.236 trend-based fib extension, which is taken from the start of 1, end of wave 2. The 4.236 is a target for wave 3. Generally, you're reaching a bit of a maximum target for wave 3 when you move beyond the 4 extension, but the 4.236 absolutely works. Then we have our wave 4 to the downside, reaching the 0.382, taken from the low of 2 to the high of 3 on a log chart. Everything is on log, which is a common target for 4, so that's very nice. And then we get our final leg to the upside in wave 5. Now the 3 between brackets extended to the 3.236 trend-based fib extension, taken from the start to the end of the bracket 1 to the end of the bracket 2. Perfect target for wave 3, no problem. Wave 4, very nicely retraced to the 0.236 Fibonacci, common target for 4, perfectly respected as well. And then we get our move towards the upside that created the current all-time high. And that is then the end of the circled wave 3. This wave 3 extended to the 3.786 trend-based fib extension, taken from the bear market low at 15k to the high of 1 to the end of wave 2. Perfectly fine for wave 3. And now we're looking for a wave 4 to the downside. Now the target for this wave 4 is the price action of the wave 4 of a lower degree, which basically gives you a target between 109.3k and 74k. It's a big zone, and based on the lower time frames, we will be able to be more accurate, but just know that wave 4 can retrace anywhere in this area. Now you can see that I do have two horizontal lines on my chart, and these are important volume support levels. The range point of control at 105k, and also a range point of control at 96.5k. I do have more levels to the downside, high time frame volume levels over here at about 85k, and then all the way down here at 77. But at the moment, right, with the current move that we have down here, I only put the upper ones on my chart. Now, if we take a Fibonacci pull from the low of wave 2 to the high that we have of wave 3, and we toggle on the targets for wave 4 and make this one a little bit smaller here. So let's see, that should be good. Then you can see that the most common target area, the 236 to the 0.5, is actually quite deep. It is between 80k, well, 80.5k, and 49.3k, which we definitely don't want to reach because we want to stay inside the price action of the lower degree wave 4, right? With a maximum target being the lower end of the 70s. However, the 0.146 is also still a target for a wave 4 if wave 3 is very, very, very extended. And that sits at 95. That works, it's pretty much in confluence with the range point of control at 96. Mind you that in some cases, a wave 4 is not even reaching the 146. If we go to this bull market here that started from pretty much, or at least, I mean, the bull market started here in 2018 and then ended, of course, over here in 2021. But if we just focus on the move to the upside in 2020, 2021, and we take a Fibonacci from this wave 2 here to the high of wave 3, then you can see, if we zoom in a bit, that this wave 4 did not reach the 146. And this was the last wave 4 here before you then get a wave 5 and then a deeper retracement for the higher degree 4 and the final 5. And I'm not going to go in detail in the previous bull markets and accounts, but you get the idea. Wave 4, especially if wave 3 is very extended, does not need to retrace into those fibs. But you do like to see wave 4 retrace into the price section of the lower degree wave 4. So that is what I am mainly focusing on. Wave 4 retracing to the price section of the lower degree wave 4. Now after wave 4, we are then looking for a final leg towards the upside in a wave 5, which internally should be a 5-wave structure. So we're looking for wave 1, wave 2, wave 3, wave 4, wave 5 on a daily time frame. Once this wave 5 is finished, you finish the bull market, and that's when the bear market starts. Now you can see that I have 2 targets on my chart based on the analysis of the current bull market. The white box here, the blue box, and the orange one. This at the moment is your common target area, as most of the different targets that you calculate for a wave 5 using Elliott waves are lining up in that area. An extended and currently lower probability target is over here, the orange box, which sits between 214K and 350K. The common target area basically sits between 129.6K and 171.7K, which of course there's a big difference, right? However, as information eventually comes in, and of course on the channel I provide the updates on Bitcoin all the time, we will be able to eventually get a lot more accurate as this final leg to the upside eventually starts. Now then we get to some of the targets that I think are interesting based on Fibonacci levels. So if I shortly remove this from my chart, then you can see 3 aware areas. The first one here is touched. Now these aware areas are calculated based on my personal KRZ method, and I would have to go too much in depth in how that works, but it's basically a bunch of fibs that are very, very nicely respected, and they work very well when price is in all-time highs and price discovery. So here we had the latest aware area, which so far has been respected for a nice long period of time. It was touched for the first time in the week of the 14th of July, and here we are still humping against that area, not being able to pass it. But you can also see that inside the common target area for wave 5, this blue area here, we have 2 more aware areas. We have the area between 139.7 and 145.9K, and the area between 167.8 and 175.2K. These are going to be very important areas as price is moving towards the upside. And then again, the move towards the upside has to be a 5-wave structure to the upside. So we will tag along and see where price is the moment it is reaching those areas. And then I'd like to talk about time shortly, the time for wave 4 compared to its wave 2. So preferably this wave 4 that we are in now, the range here, is going to end somewhere between the week of the 25th of August, which is this week, and the 20th of October, the week of the 20th of October. And then we look for our final leg up in wave 5. Now, if we then look at the potential timing of wave 5, if wave 4 can end somewhere in that area, then preferably wave 5 is ending between the 24th of November 2025 and the 16th of February 2026. Once the low for wave 4 is made, I can drag these fib times to the low that has been created, like the end of wave 4, and we can get a bit more accurate, right? Because we have more information, but at the moment this is the target area for the end of the bull market. And then you also see I have some more stuff going on. So basically, if we look at the bull market and we look at the different stages of an impulse, we have the 1-2s, that's your reversal. We have your wave 3, that's your extension, right? And this is the wave 3 of the lowest degree. Of course, the largest degree, wave 3, is all the way like that, right? But this is your wave 3. And then you get into the wave 4s and the wave 5s. Now you can see that the volume so far is nicely respecting a typical impulsive structure. You have high volume at the reversal area. That's actually quite normal. And slowly, as you build your wave 1-2s, volume is slightly declining. That's perfectly fine. In your wave 3, the volume goes up. And then in your 4-5s, volume is going down. But mind you, that when wave 5 is going to extend and you get a bit of a blow off top, the volume can definitely increase and move beyond the highest peak that we had in wave 3. But at the moment, you can see that with the volume indicator, down, up, and down again. Once wave 5 to the upside starts, you expect at least locally here for price to again move a little bit for the volume to move to the upside again, at least by a bit. And if wave 5 is very strong, as mentioned, it might take out the peak of wave 3. And then we look at this structure to the upside from a simplified point of view. And I have done the same with the previous 2 bull markets. And now things start to get interesting because I have a lot of folders here, as you can see, comparing the previous bull markets with the current one. Now, Elliott Wave Simplified is a methodology that I have invented pretty much, and it's on YouTube. So if you go to my link tree in the description, you go to the Elliott Waves Beginner Guide, you click, you check out the first video. I was thinking, Elliott Waves is already very difficult. How can I make it as easy as possible to understand? And that is where eventually that theory and methodology came from. So make sure to check it out. It's titled The Simplest Way to Use and Trade Elliott Waves. And it literally changes the way you look at Elliott Waves and the complexity of it. So basically, from the low, we have the first grinding structure, right? I explain all of that in the video as well. But we have this overlapping grinding upward structure. Then we get the move towards the upside with an increasing amount of volume. Then we once again create an overlapping grinding structure to the upside. This is a very typical impulsive pattern. You get your 1-2s, you get your wave 3, you get your 4-5s. The push to the upside creates a gap between the 1-2s and the 4-5s. Therefore, that is your high probability. If we look back at Elliott Wave knowledge, this is your high probability wave 3. These are your high probability wave 4s and 5s. These are your high probability wave 1 and 2s. The more 1-2s you have, the more 4-5s you have. But in general, this is your main buying area from a investing point of view, because this is like a weekly time frame. This is the ride that you want to take. And once you start moving into your wave 4s and 5s, that's slowly when you start consider selling, right, on the high time frame. Now we have the exact same structure. Again, Elliott Wave Simplified in previous bull markets. This is the bull market here, starting from the COVID low in this particular case, because if I include this 1-2, then the grinding structure is a little bit sketched. And if I include this wave 4, it's quite deep. So I just looked at the wave 3 to the upside, but these are your 1-2s, again, overlapping structure. You get your wave 3 to the upside, then you get your wave 4s and wave 5s, creating a nice gap in the middle. Perfect. After your wave 4s and 5s, you reverse. And then we look at the one here, which is the bull market, starting at 2015, ending pretty much here at around 2018. Now, in this case, if I open my count, which is this one here, in 1 second, I will explain everything that popped up on my chart, but just look at the chart. So here we have a 1, 2, 1, 2, 1, 2. Let me do this. 1, 2, 1, 2, 1, 2. And you may think like, yo, the 1-2s are actually quite divided. They're quite far away from one another. That's true in a sense, but look at the overlap between the ranges, and that is important. So as price is building the 1-2s here, 1, 2, 1, 2, 1, 2, and we look at this and be like, well, this wave 2 is actually quite far away from this wave 2. Yeah, but we have overlap between every range that was created. Up, down, up, right? Down. We have overlap here. Price moves up again, comes down, overlap. Then it moves up again, down, overlap, up again, and then of course down, overlap again. The first gap that is created on the weekly time frame is here. That's your wave 3. We look at the volume increasing here as well. That's what we like to see. So we have a multi 1-2. This is, again, let's go back to being simplified. We have our 1-2s where price is overlapping and grinding as it moves towards the upside. We have our wave 3 of a lowest degree here, which creates a gap. And then we get into the 4-5s. And then we have the final move to the upside, creates the all-time high, and then we retrace. A very typical impulsive structure. You cannot make Elliott waves simpler than this. This is basically that video in a nutshell, but I also talk about corrective ranges, so you still have to check it out. Support the algorithm. So with the current bull market here, if we count a 1-1-2, we want to see a 4-4-5, which means get one more wave 4, final leg to the upside in 5. Once finished, you look for the bear market to start. Okay. Now we start talking about comparing the previous bull markets in a bit more detail with its targets, because what of course we want to know is how is this one comparing to where we were in previous bull markets. We're currently here and we are looking at being in the final wave 4. So if we compare being in the final wave 4 here with being in the final wave 4 in the previous bull market and being in the final wave 4 of the bull market before that one, we can kind of compare the final leg to the upside and get an idea of the target for the current bull market based on the information of the previous bull market. Now, starting, however, shortly with my old video of 8 months ago, where I covered the high time frame. And if you go back even further in time in the channel, like way back, then you will hear me talking about minimum target 100K, etc. Now, here, 8 months ago, I said target between 81, we were already at 98, and 176. And that number is important, 176. So that was like the big target area. And then based on information, we know what we get. So now I will remove this and we go to this bull market of 2015 to 2018. And there's a little bit of calculation stuff going on here, but you can see that there's a question on the chart. Are we here? Now, as you can see, this is a lower degree wave 4. This is the higher degree wave 4, but I included both, and you'll see it at the end of the video. I have both this one, where are we maybe in this wave 4 looking for this wave 5 towards the upside? Or are we here? I personally prefer us to be here because this was the final wave 4. And then we got our wave 5 to the upside, the final leg. Because here we are in a lower degree 4, got another 4, and then the push up in 5. Right? And comparing to the current bull market, we would be in the final wave 4 as per my count at the moment. Anyway, I used the data for from both of these. So calculating from here to the upside and calculating from here to the upside. So if we start with this one, if we would be here, then the move from the low here, which by the way, I checked on the chart with more history. Don't worry, this is indeed the low. The move up to the low of wave 4 is 2600%. From this low of wave 4 to the high is 568%. Now the first leg was from $109 to $3,100, which is 2600%. It's a multiple of 28.4. and a raise in price of about $3,000. This move to the upside contained about 78% of the bull market. The second leg, as I then call it, which is this move to the upside, this one here, was from 3,100 to 19K. Now what's interesting is that the price difference is larger. So the first structure here is from $100 to 3,100, and people may be thinking like maybe the media is not picking it up yet and all of that stuff because you're only talking about a few thousand. Like the nominal value, the nominal increase is quite small, even though the percentage increase is of course absolutely insane. And then you get to the second leg where you go from 3K to 90K, it's only, quote unquote, only 568% of a move towards the upside. It's a multiple of 6.1, but it's plus 16K. And because you start to go into 5 digits from 3K to 90K, probably at that moment, I wasn't involved back then, but you can imagine everyone then be like in the media, holy shit, right? Yo, Bitcoin is now 10 and 15 and oh, it's double digits. And we started at 100 and no one was interested. Interesting. Anyway, psychology. So that is, of course, also when you know, okay, the peak might soon be in. Right? Now, this final leg to the upside covered 22% of the total bull market. Okay, so if we use that data and we compare it to where we are at the moment. So if price would retrace in wave 4 to 100K, I just wanted to use a round number. So therefore, the move from the low at 15K to 100K is a 546% move. So we compare that data from 2017 with what we have in front of us. 15K to 100K is 546% times 22%, which is the final leg to the upside that I just covered of the previous bull market. Right? So this move to the upside here was then 22% of the total bull market. So we use that in our calculation. Of course, by the way, this is also with the help of ChatGPT, but double checked by myself. We basically need to add on the current 100K potential low for 4, which is a pure, like, you know, just a round number. We would need to add about 119%. Now, here I say the 22% was the final leg of 2017. We have to put 190% on top of the potential wave 4 low, which I then put at 100K for the round number's sake. Bull market target estimation, 100K plus 119% is about 220K. Give it a bit of a range. Shorter wave 5 would lead to a price target between 180 and 200. Extended wave 5 over 250K. Lower probabilities though. Now we're going to come back to these numbers, but I'd just like to show you the calculation. And that is when we are in the lower degree wave 4. So I want to make sure that I drive this home. That is if we're in the lower degree 4. At the moment, preferably with the current bull market, we're here. So let's compare. The move to the upside, the first leg, basically from the low here to the low of this wave 4, $109 to 5.5K. It was about 5,000%, 50x multiple, a 5.4K increase, and it consisted, or it basically contained about 95% of the bull market. The second leg, which is then this final stretch here from 5.5K to 19.8K, if we want to be exact, was about 260%, 3.6 multiple, 14.3K move towards the upside, and it contained about 5% of the bull market. Are we here? I would personally prefer to be here. So if we now compare this data with where we are at the moment, and it's exactly the same, but now I take a percentage thing from the low at 15.4K, drag it to the upside at about like 100 again. I again used 100 for the sake of having a round number. Then we get the following. So current bull market data compared to the last 2017 leg up. 15K to 100K, 546%, times 0.053%, which was the last leg up in 2017, gives you 29. Add 29 on top of 100K, and your target is 125 to 130K. Give it a bit of a range, depending on the end of wave 4, then 135 to 140K. So basically your range is 125 to 140K, which would be your lower end of a bull market target. Cool. We're going to come back to this number because now we go to the the previous bull market. Now the previous bull market, I counted it in a lot of detail, but I want to leave the detail out. Basically, we have a wave 1, 2, 3, 4, and 5, and this correction is counted as preferably a wave W. You have your X, and then your final leg is Y. Okay. But in this scenario, we have the move to the upside here to the low of the last wave 4, which was then the low at 30K. And then the second leg up is from 30 to the all-time high at 69. So the 2020 bull market, it is a bit more tricky to compare nicely with where we are now in 2025. In 2020, we had a very clear and long deep wave 2, which was this one here, absolutely beautiful, and an equally easy to identify wave 4. So very clear move up, down, long wave 3, 4, and 5. And you can see compared to the current bull market, of course, we have our 1-2 here, but you can see how large and how clear this 1-2 is. So very, very nice. Maybe we would need to compare this structure with the current bull market, but nonetheless, I've taken into account the 1-2 and the 4 and the 4-5. So data. The first leg from 3.1K to 28.8K, which is the low of wave 4. Plus 818%, 9.3 multiple, plus 25.7K dollars. 83% of the bull market is contained in that area, basically. Now the second leg, 28.8K to 69K, plus 139%, 2.4 multiple, 40K move towards the upside. It consisted about 17% of the bull market, not in time, in price, from the last wave 4 to then your high and the end of your wave 5. Okay, we use this data. We're going to compare it against the current bull market. So again, I use the target from the low here to about 100K. And then the target calculation would be, if we compare 2020 with the current bull market would end between 190K and 210K. So if we compare all of these numbers and summarize it, this is definitely a longer video, but it's super interesting. I'm an Elliott Wave nerd. So if we combine everything, meaning my old analysis from 8 months ago, the current analysis on the chart, the comparison against 2017, both with the longer and the shorter final leg, right, depending on where we are, and the comparison against 2020, we get this. So we have the data that I just explained, which I won't repeat. You can stop the video and basically read it. But then we have the summary here. The summary would be that your main target area 1 is between 125K and 45K. That consists, this target area, consists of the 2017 shorter leg, which would be more preferred because here we would be in the final wave 4, but and the current analysis, low target, as based on the current analysis, the lowest target would be 129.6. This is 125, give or take. Then the second main target is 170 to 220K. 2017 longer leg fits inside that area, like the target that we calculated based on the 2017 longer leg fits inside that area. The 2020 comparison is in that area. And the old and current analysis have a max target being around 170, 180K. Then we have the extended area. And the extended area has lower probabilities. It's 220K to over 250K. That is only if we use a very extended move towards the upside or the current analysis over here, the orange box, 213, well, basically 214K to 350K. Okay, so this is pretty much the conclusion of the video. And to summarize, your main target area is first 125, 145, or maybe a little bit smaller, 130 to 145. Very important. We'll be aware. We'll check it. It also fits with the common target area in here, right, of the analysis of the current bull market. And then we have the second main target area being 170 to 220K. And then we have the extended target area, lower probabilities. Now, of course, based again on how wave 5 develops, we'll know exactly where what, and what the probabilities are. But these two are higher probabilities. And if we would look at my current calculation on my chart here with a target between 130 and 171, if we include the preferred count of calculation of 2017, where this is your final 4 and this is your 5, as preferably at the moment we are working on the final 4, and then we get wave 5 to the upside, then the area between 125 and 145 should be very much be taken into account. Like, it's definitely an area you have to be aware of. And then we get to the second main target area. Then I shortly want to cover the alternative scenarios just to make sure you understand why they have lower probabilities. So first of all, the finished bull market as I have it here, a 5-wave impulse to the upside where the final leg 5 is counted as 1, 2, 3, 4, 5. Wave 4 here is very long compared to your wave 2, but more so it is very deep. If we go to the linear chart, then this wave 4 almost touched the 618, which is definitely not what you like to see, as the 618 invalidates wave 4. So it is very deep, but of course on the log scale you can see it didn't touch it. But if this would be the impulse, then your wave 1 internally has to be counted as a 1, 2, 3, 4, 5. That's your wave 1, that's your 2, 3, 4, 5, which means that internally you have an extended wave 1 impulse, and that is the rarest impulse of the 3 different variations that we have. Most common is extended wave 3. On the second position, we have an extended 5. And then the rarest impulse is the extended wave 1 impulse. So it just lowers the probabilities. We could count a multi-1-2 here as a wave 1, a 2, 1, a 2, 3, 4, 5, 4, 5. In this particular case, you do have a very, very long second wave 2 compared to the first wave 2 over here. And preferably your wave 2s are similar in size, or the later wave 2 is maybe a little bit shorter or maybe a little bit longer, but this is a very, very big difference between the 2 wave 2s. And also, if we would end a bull market at the current high, this has to be an impulsive motive wave structure to the downside, either in impulse 1, 2, 3, 4, 5 or diagonal. And currently the move to the downside would have some higher probabilities of being corrective, not motive. And then we get to the second scenario. Here, alternative again, finished bull market 1, 2, 3, 4, and then you have your wave 5 ending here, followed by a flat ABC. Same problem at the beginning. And in this case, we then need a motive wave, preferably an impulse, which is most common in C, to the downside, which then starts with a bunch of multi-1-2s or a wave 1, 2, and a 3, 4, 5. But again, it requires an impulsive move down or motive wave down, which at the moment locally doesn't have the highest probabilities. Even if price would create a 5, a 3, 5, I would continue to prefer it to be a wave 4. Only if price is losing 74K and really starts moving below, that's where a wave 4 that's what, yeah, it pretty much becomes invalidated. You don't really like to see that structure change. Then we get to the most bullish scenario. The moon is only getting bigger every video, which is the multi-1-2. So you have a 1, 2, 3, 4. Same problem here, by the way, because of the extended wave 1. 1, 2, 3, 4, and then you have your wave 5, and wave 5 is then 1, 2, 1, 2, 1, 2, and you look for 3, and 4, 5, 4, 5, 4, 5. Now in this scenario, the invalidation is the low at 98. However, even though it's not invalidated, I can't give it the highest probabilities because you're counting such a big multi-1-2 so late in the bull market that it makes more sense. With everything I explained about the other impulse where you look for a 4 and a 5, it makes more sense to look at 4 5s than counting more 1-2s. You preferably see 1-2s at the beginning, multiple 1-2s at the beginning of an impulse. And this is not just a few 1-2s, they're massive. So you are looking at a 1, 2, 1, 2, 1, 2, a mega wave 3, and then you get your 4, 5, 4, 5s eventually to the upside. It's also going to take quite some time. Now you're in an extended 5 or a blow off top, your wave 4s can be at times shorter than your wave 2s or similar in size, but you're still looking at ending the bull market quite late, maybe more towards like a mid 2026. Not the target at the moment, which would be like November to like February-ish. You're really looking for a later time target. So yeah, it's not invalidated, not the highest probabilities. Your wave 1 again, extended wave 1 has to be counted there. And a multi-1-2, such a large multi-1-2 so late in the cycle is not really something I like to do. Even if you count a multi-1-2 here, and then again you have the same problem. So you remove this, and you do this, and you do this, and then you have 1, 2, 1, 2, 3, 4, 5, 4, double 1, 2, and look for continuation up. Second wave 2 again, very, very big compared to the first wave 2. So it's just difficult to give it the highest probabilities when we look at the rules and the guidelines. Not invalidated, not the highest probabilities. The direction, however, is the same as you are looking for price to continue towards the upside. And in that case, we can always, at a later stage, look at the move up, see what we get, and then eventually take it from there. If we do get a multi-1-2 and a large 3 towards the upside, you know, we'll know. But the direction between the extended wave 5 and what I have here on my chart is the same. Your targets are going to be different, both from a price and time perspective. Now I'll shortly show you my levels, maybe a bit more locally, areas of support for that potential wave of 4. Now I do prefer to then keep an eye on the higher time frame levels and especially volume, which is what I have here on my chart. So just below price, we have the area between 107.7K and 105K. Then we have this one here at 96. Then we get to 85 and then a 77. If I open my higher time frame horizontals, don't look at the blue, look at the yellow and the purple one here. So the horizontal levels, my preferred, as mentioned, is volume, but I also keep an eye on this. So we have a weekly above us, but to the downside here, we have at $100 a weekly, and then a whole gap to the downside. We're at the monthly at 82. Cool. That then brings us to the probabilities, which again is a summary of the primary scenario compared with the previous bull markets. So currently, probabilities are highest for the impulse to the upside, where we start with a multi-1-2 and we're working on the final wave 4 and wave 5. That is the one that has the highest probabilities from an Elliott Wave point of view. If we combine everything, including the targets of the old analysis, the targets of the current analysis, the comparison against 2017, both with a shorter and longer final leg, and the comparison against the 2020 bull market, then the summary is that the main target area 1 is between 125, 145, arguably 130, 145. Your main target area 2 is 170 to 120, and the extended target area here, 220 and above, has lower probabilities. So these are the first two main areas of interest to end the bull market. Now, as price then moves up to the upside, we want to count a 5-wave structure. We will tag along, we will follow the count on the different time frames, and we will get a better idea of when we are creating that particular top. But it's nonetheless very interesting to do this analysis, compare it with the previous bull markets, and then use that in our advantage to get a bit of a better idea of what the target is going to be when we combine everything. So this is the analysis. Long video, but hopefully you enjoyed it. So I hope this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.